Good morning, Mark Soderberg with ADM Investor Services with your morning outlook for Tuesday, June 24th. Well, nearly all red on the screen here overnight as the agricultural space just continues to soften, led by lower energy prices. Overnight, President Trump posted on Truth Social that a ceasefire agreement between Israel and Iran has been reached. Spot crude oil prices are down almost another $3 a barrel this morning, trading to back under $66 a barrel, and now down about 12 and a half bucks from where we were just over 24 hours ago. The U.S. dollar is sharply lower as well, however, holding just above the lows for the month. Corn right now just reaching new lows, down another 2 to 3 cents. Wheat ranges from 6 to 11 lower. Mixed trade in the soybean complex, well, nearly all lower now, down 5 to 7 in the beans. Bean oil is down about another penny to 125 points. Mixed in the meal, all contracts pretty much within about a half buck of unchanged. After the close yesterday, the CFTC came out with their delayed weekly commitment of traders report. It did show money managers continue to pile in on the short side of the corn market, selling another 21,000 contracts in the weekend and last Tuesday, the 17th. We estimate they probably sold another 14,000 contracts yesterday, extending that short position now out to about 200,000 contracts, the largest in 10 months. Opposite story in the wheat. Money managers there, they did buy 31,000 contracts combined across the three classes in the weekend and last Tuesday. This drove that short position down to about 152,000 combined, well off the record short position just about a month ago at 235,000 contracts. Starting to see some of those shorts come back into the market now in the last two sessions. The CFTC did show activity in the soy complex was mixed. Buyers in beans, buyers in oil, while selling another 20,000 contracts in the meal, extending that short position back out to near record large at 107,000 contracts. Overnight prices just failed to respond to the poorer than expected crop ratings. Corn conditions, they were off 2%, while both winter wheat and spring wheat slipped 3% in good to excellent category. Beans held steady at 66% good to excellent. Progress-wise, 4% of the country's corn is now silking, in line with a year ago. Bean plantings were reported at 96% complete, while 8% of that crop is blooming. That's up from 7% a year ago, which was also the 5-year average. Winter wheat harvest remains a slow go, only 19% complete versus 38% a year ago, and the 5-year average of 28%. U.S. weather remains mostly favorable. 24-hour precipitation maps show an impressive line of showers across or stretching from Texas Panhandle into central Wisconsin. The heaviest totals were scattered in central Kansas, southwest Iowa, and southwest Wisconsin. Temperatures behind this system are sharply cooler as the extreme heat gets compressed into the southeast. Temperatures, however, will remain at above normal readings across much of the central and eastern Corn Belt this week, as rains will favor the northern Midwest and Great Lakes region. Quarterly stocks and acreage report next Monday. New contract low here for July corn overnight without a whole lot of support on the weekly charts until the October low of $3.99. A new 6-month low for December corn, however, that continues to hover just above its contract low at $4.28. At these levels, in my opinion, corn is already discounting higher production in South America along with record yields here in the U.S. July beans approaching 100-day moving average support at 10.50. Same story with Nova at 10.33. Oil has worked its way into the gap from last Monday and limit up trade. Both Chicago and Kansas City wheat futures are challenging. Their 50-day moving average is near 5.40. Thank you for listening, everyone, and I hope you have a great day.